Hey everyone, welcome back to Corporate Decoder. In this video, we're diving into TruGolf Holdings' latest filing, and let me tell you, there's more than meets the eye. It's like promising a hole-in-one and landing in the sand trap. We'll see if TruGolf can still make par. This filing outlines TruGolf's plans to let some of its big investors sell off a huge chunk of stock. We will tell you what that means and what important figures in the balance sheet are telling us. If you're new here, my goal is to take complex Buzzians documents and explain them in simple English and tell you something that will make you look smart at the dinner table. If you enjoy that, please do subscribe. Also check our Discord community, the link is in the description. First off, TruGolf is registering to allow its selling security holders to offer up to 420,000 25,000 shares of Class A common stock. These shares are tied to the conversion of preferred stock, which is linked to warrants. If you're scratching your head, don't worry, the important thing to understand is that we're talking about a lot of shares potentially flooding the market, which can possibly make the current share price go down and cause dilution. Here's the kicker though, the company itself won't get a dime from these sales unless the investors decide to exercise their warrants for cash. This means the current offering benefits current investors who want to dump shares, but a company might be left out. Basically, no benefit for the company besides the possibility of warrants being exercised, but the market has to digest a large number of shares. Speaking of stocks you might know about, TruGolf's Class A common stock trades on the Nasdaq Capital Market under ticker symbol TUGD. As of June 17, 2025, they were selling at just $0 and at just $0 Oz per 91 ponds $95. Also, it's worth mentioning that TruGolf is considered a smaller reporting company and an emerging growth company, which means they get to skip some of the more detailed reporting requirements. This makes it harder for investors to fully grasp the company's financial health. Less information equals more risk. This needs to be kept in mind when analyzing them. Of course, there is a big warning on page 12. The risk factors section is a long one, like a PGA golf course. Let's hit the important ones. TruGolf's success hinges on its brand. If their reputation takes a hit, whether from product issues, ineffective marketing, or even just failing to keep up with trends, sales could suffer. They don't use traditional advertising, relying instead on online and social media marketing. So their brands are especially important. And talking about risks, the filing clearly states that TruGolf will need to raise more money to execute its business plan, which could make your current shares less valuable. If they can't get the cash if needed, that could have material impact on the operations. Nothing new for companies, and it's always a risk to consider. But what I think is more interesting is the discussion around the supply chain. TruGolf's business depends on getting its products reliably. Supply chain is still a mess. The filing notes the pandemic, the Ukraine and Israel wars, labor shortages, etc. as potential problems. If they cannot get reliable delivery of their supplies, that could be losing a significant amount of sales. On another note, TruGolf needs to stay relevant, which is never easy. Consumer tastes change quickly, and if TruGolf can't keep up with the latest preferences in virtual golf and technology, or if they fail to bring new products to market, they could end up losing market share. To avoid this, they depend on innovation and quality product to compete in the market because the competitors will also try innovating. Seems simple enough. Also, because they often use golf players to promote their brand, TruGolf acknowledges something we all know. Actions taken by celebrity athletes could damage their images, which could impact your sales. Did you know that TruGolf sales tend to be higher in the first and fourth quarters of the year? That's because this is when its colds and indoor activity increases. They noted that their customers cancel orders, so if there is an unexpected heat wave, it's possible for their estimates to come wrong, but I don't think so. Okay, let's talk about accounting. TruGolf admits to having a material weakness in our internal controls. That's accounting speak for we might not be doing our financials right and there might be misinformation. The product is not the greatest, people need help, and if they get bad to no service, people might jump the ship to other competitors. So high quality technical support is a major concern, and the filing acknowledges this. If their intellectual properties is not well defended, fake products could be showing up and cutting into their revenues. Also, they mention China. This is very common. It gives a feeling they are trying to keep an eye on their IP rights. They have also dual class share structure in which the founders get way more power when voting. So even if you have shares, you really can't do anything if the founders don't agree with you. This limits what you can do. And there is a very key disclaimer, a very big one, stating they got notified they may be removed by Nasdaq for not following requirements. And last but not least, we have, again, that offering. Sales of securities in the public market by the selling security holders, that is, these initial investors who will dumping a huge amount of shares, could cause the price of securities to decrease significantly. Before we talk about the financials, it needs to be known that TruGolf is allowed to have non-audited numbers and disclosures. So that means they might not be as accurate as your regular big companies. With that said, let's get straight to the most interesting part. Let's find the income statement for their results from the 3 months ending March 31, 2025. Compared to 1 year earlier, revenue is up, but only slightly, going from about $5 million to $5.4 million, an increase of 8%. Hey, it's still something. Gross profit also saw a nice jump of about 20%, from $3 million to $3.6 million. Looks like the products were more profitable than last year. The problem? Operating expenses skyrocketed, especially selling, general and administrative expenses, which jumped up 50% from $1.8 million to $27 million. Most of it was due to hiring contractors. The end result, even with increased revenue, is still a net loss. Net loss increased by $1 million to a total of $2.6 million. Ouch. But wait, at least they are loaded on a most important metric, cash from $10.8 million to $12.6 million, a nice 2 or so millions. Let's take a quick look at their long-term items from the balance sheet. On the asset side, their capitalized software development costs have increased, meaning they expect the software that they are making to improve in value. However, the liabilities more than cancelled out those benefits, which is the likely explanation for going from a 1 million negative working capital to only a 29K. Looking more closely at this, we note that the reason our revenues were not as high as previously thought is that we had 1 million of deferred revenue or payments from clients and services, say that we didn't yet deliver. TruGolf walks and talks a very weak company while giving a vote of confidence at all cost in its technical capacity to deliver, while stating all negative facts with the utmost of transparency when legally obliged, and TruGolf is definitely in a tough spot. The company is burning cash and its revenue isn't increasing enough to offset the costs aft. Except RCEI thinks all that. The company has high expectations and trust in future sales and has excellent tech, even though numbers are not there yet. Sounds like empty hope. There is little indication they might become profitable without help. It will take time to understand what it is actually worth, and the stock is going to be very volatile. With that said, what do you think about TruGolf's financials? Do you think TruGolf can turn things around, or is this just par for the course? What's your take? Make sure to drop a like, subscribe, and hit that notification bell for more. To share the insights, drop in the Discord chat to continue the discussion. Thank you, and see you next time.